Welcome to this new episode of Your Next Trade Code. Today, no jobs. So many things to discuss today, from gold to Lululemon to the 10 years to macro with the PMI. But let's start with the big picture, with the NFP's numbers that we had on Friday, with the job number in the US, where with the job creation in the US was only 22,000 jobs. So as you can see, since May, pretty much the US economy has not been creating many jobs, and that's an understatement. We are talking only 22,000 when the expectations from the consensus was much higher. And what we saw as well is big moves across asset classes, more specifically looking at bonds. So if we look here at the 10 years, most recently, and that's something that we flag on the Discord community, where we started to add the move on Thursday when the US 10 years went below the 4.10%, and we had a big move actually on Friday, because now the expectations are actually for the Fed to be more accommodative, to be more dovish, where the market is expecting almost 3 cuts in 2025, as we're going to be seeing later. So big moves for the bonds, and we are talking from the 2 years to actually from the 30 years to the long end of the curve. As we discussed, 30 years has been under pressure. Why? Because governments are running big fiscal deficit. But really today, a lot to discuss. We flagged last weekend the breakout of gold, and we're going to see the confirmation. We're going to be talking about AVGO. We're going to be talking about Lululemon. And as always, let's start with what have been the week-to-date asset performance, starting with stocks on the left-hand side. S&P is roughly flattish. Nasdaq and the S&P are roughly up. But we are talking, a flattish market after the correction, the small correction that we had on Friday. The interesting part is obviously gold here. It's up 4% on the week. So this is still your flight to safety. What is important to flag is so far, gold was pretty much the only play in town for the flight to safety, whereas before we used to have, when the equities were struggling, what we start to see, where usually we will see investors buying bonds, meaning yields going down. And for the first time for quite some time now, bonds are being making their usual job. So maybe something to carry on looking with the bonds. WTI down 3% because there are talks that actually OPEC through Saudi Arabia will be putting more supply into the market. If you look at the US dollar, pretty much flattish, but really closing at lows versus most currencies. And if we go back into the year-to-date asset performance, as you can see, the US dollar is down 10% versus most of the currencies. Yes, stocks are up in the US by 10%, but if you do that versus the euro, for example, they are pretty much flattish. Gold, really the best asset for the year. I think I read something that it has not been seen like for 30 or 50 years. So very strong year for the gold. Looking at the week-to-date industry performance, as always. So you do have like the S&P that is just here, and you see the dispersion between the losers and the winners. So left-hand side, energy, as we discussed, with oil WTI on the way down. And you can see as well financials. JP Morgan was down on the week and down on Friday, because when yields are coming down, most of the time the banks are making less money. Utilities, this is not because of the yields coming down. This is mostly because the AI play, which is about building new utilities facility, has been under pressure. So last weekend we discussed the end of the AI infrastructure growth that has been confirmed with NVIDIA, with many names like GE Vernova in the US. We are talking Siemens Energy in Europe under pressure. Now we are going into the second play of AI, and I think I should be doing probably a webinar about how to generate idea around AI. If you are interested, put a comment or put a like or send me an email, and that's probably something that I should do. Right-hand side of the week-to-date industry performance, by definition, when yields are down, home builders have been very strong, because expectations are actually for the home building and the housing market to restart after 2 or 3 years of struggling. Gold miners, by definition, doing very well, like with the gold. And as you can see as well, you get the 20 years treasury. So this is the TLT for the ETF that's been very, very strong. When yields are coming down, that means, TLT, the price of bonds, have been on the way up. And this is pretty much for the week. So on sector performance, this is the same. We mentioned energy that has been struggling, financials and utilities. Telco, very, very strong. Why? Because Alphabet, Google has been extremely strong, as the US have been saying that they can keep Chrome, and overall that there's not going to be any dismantling of the company. And that puts a strong telco. Same with consumer discretionary, with Tesla, the announcement of a huge package for the CEO, Elon Musk, for the next 10 years, if he's going to be reaching some huge target. Actually, we are talking 7.5 trillion in terms of market cap, creation of, I think it was something like 1 million robots. But overall, if you look at the 1 billion versus the 7.5 billion, that means, you are roughly giving to Elon Musk 10 to 15% dilution to the man. So what about the rates? Really, this is the one that is the most important for the week with the gold. But really, if you think in terms of size of market, the bond market is the biggest one. So here, looking at the US 10 years, as you can see, we are down 15 bips on the week. I don't like to be doing technical analysis on yields, but more or less, we're going to see later. We have been trading between 4.2 and 4.5.6%. And on Thursday, we started to come down. And we had this move that it still looks pretty tiny versus 2020 onwards. But this is significant. So we're going to have question marks if there's going to be some follow-up. Why? Because we're going to have the second part of the mandate. So far, if you look at NFPs, the job market, this is the first part of the Fed mandate, where they want to have full employment, and the second one is about making sure that there is no inflation. And this week we're gonna have PPI and CPI. So Fed funds expectation. So for this September, this is a done deal. We're gonna have a cut of 25 bips, and actually they are start of the talks that we could have 50 bips for like a jumbo cut in September. I think it's too early, but what the market is telling you going into December is now we are almost at 3 cuts. So I think we're gonna have, so far, what the market prices is 1 cut in September, 1 cut in October, and 1 cut in December. So 3 cuts going forward. So much more dovish. So if you look at this line, so if you look at the week on week, pretty much you had a move of 10 bips, which is quite significant over the last 5 days. So what about the VIX? Volatility is still pretty much compressed. We are at 15% for the S&P over the next 30 days, 12.7% on the 9 days. So we had a bit of a jump in volatility. I can't remember which day it was, but then, as always, you have structured products that are selling volatility, and we are around the 15% or below. So let's look now at the technical analysis, starting with the one that we flagged last weekend, which is gold. We flagged the 34.50 as a big level, and guess what? The next 5 sessions we have been on the way up, and we are talking 4%. So big move for gold, and that tells you that investors are still struggling to find the assets to save from inflation. If you think about it, if you do have like inflation as well, it's good for stocks. It's good for EPS growth. So let's look at first as the S&P futures. The trend is still pretty much the same despite Friday, but we have been trading around 6,500 over the last 10 days. Importantly, over the last 2 Fridays, we had a bit of a hiccup where the market sold off by 50-60 points. So last weekend, we mentioned that we played actually the Friday 0 day to expiry. That's something I started to like when there is macro number. Instead of being with the futures, I do very short dated futures. So last weekend I did the 647. This weekend I did on the SPY, the 650. Worked pretty well. I flagged it on the community before doing it. So we went from 0.6 to 2.6. So we bought at 0.60 cents and we sold at $2.06. So pretty good, and unfortunately it went to 6.5, but there is no back trading. Looking at the Nasdaq, this is pretty much the same picture, where we are trading sideways, where we are lacking a bit of direction. What is important to flag is if you look at the S&P, we made new highs, but if you think that technology is the leader, actually, we didn't make any new highs. I want to flag as well, we look at CL1, which is for WTI, with a bit of a sell-off on Friday, as we said, with the OPEC saying, they didn't say anything, but that was the rumor in the market that they're going to be putting more supply into the market. Looking at the 10 years, there is nothing like, charts on and technical analysis, but what you want to see is literally this 20%. So if you do a bit of dodgy technical analysis, if you go around this level, as you can see, we have been going lower. So the big question is going to be for this week and the next few weeks, is it going to be some one-offs? We do know that the Trump administration is really keen on yields going much higher, but in the meantime, we still got a sticky inflation. One to flag for the week and the incoming week, because we had the Japanese Prime Minister who is probably going to be resigning in the next few hours. We have been consolidating, so we could expect a big move in that currency. Another one that I want to flag is Alphabet. So really big move for the week. Actually, if you look at Google, Alphabet versus the other big leaders, that was doing pretty well since actually end of July. You see this big gap in big volume and the follow-up. So very strong price action for Alphabet on the back of actually that the company is going to be, the perimeter of the company is going to stay the same. Finally, NVIDIA, we discussed the end of the infrastructure play, AI play. I think this is, for me, still very valid. We saw as well some of the money going from NVIDIA to Broadcom. So on Thursday after the close, we got AVGO earnings, and the stock on Friday did very, very well. So as always, as an investor, you have allocation into some space. So if you think about AI infrastructure, the natural bid was on NVIDIA, but now some investors, and more than some investors, are moving money from NVIDIA to AVGO. So let's go back into what happened for the week, starting with the S&P. So on Monday, the market was closed in the US because of Labor Day. As I said, a bit of a hiccup on Tuesday, but after that, we recovered due to the gamma and the squeeze over the next 3 to 4 days. And then, as we saw on that chart, that was the up. This is the NFP. So first reaction was, I really don't care about the NFP. And what was interesting that we flagged as well with the community is Goldman Sachs and JP Morgan were saying, if we have job creation under 25,000, the market should be going down by 75 bips, 0.75%. This is exactly what it did. So as we said, when the market for the futures was at 65, 38, and roughly spiked around 650, 180. We put some 0-day to expiry 650 SPY put, and that works, as I said, very, very well. So let's look at what happened for the macro. We had the PMI. So PMIs, what is interesting is most recently, the last 2 months, actually services and manufacturing in the world have been doing better. So this is a good sign after the struggle that we had around tariffs. Actually, some leading indicators are doing better. We mentioned seasonality. Seasonality last weekend did the play where the market struggled a bit. We mentioned Google. We mentioned Broadcom, and I want to mention now Lululemon. Why? Because most of our trades will be around stocks, because we are talking a universe of 2,500 stocks in the US. And if you look at Lululemon, or if you look at any stocks, what matters for a stock is the correlation between the stock and the price action. So the stock and the earnings. So if you see earnings revisions, if you see earnings going higher for a stock, like we saw for quite some time for Nvidia, the price action, the stock will be following, and vice versa. So Lululemon, which has been a play during COVID, this is pretty much as an educator when I started in 2015 with trading education, most of my clients or my students will come and say, look, Greg, I want to be buying Under Armour. And I said to them, be extremely careful. Under Armour, there is no story. It's facing the competition of Nike, Adidas. There is no margins. Now, the struggle is for Lululemon. And as you can see from that chart, so left-hand side, this is the stock in white, and in blue here, this is the EPS for 2026. And as you can see, as EPS have been revised down by the company, the stock is coming lower and lower. So this week, they said that instead of doing $14, they're going to be $12, and the stock was down 17%, something on the close. So pretty much the same. If you have a stock, it's all about the EPS growth. Is how the EPS are moving forward. So we do have as well, as I said, the gold breakout, and the most important part for this week, which was bonds. So going forward, we are interested into still the bonds. How they're going to be impacted by the bond supply. So that will be the different auctions that we're going to have for this week. We are talking on Tuesday, Wednesday, and Thursday, but we should not expect any comment from the Fed, because the Fed is in blackout period, as we do have the FOMC meeting in 10 days on Wednesday. But what is important is inflation, PPI, CPI on Thursday. So CPI, if you look at the core expectations for this Thursday, on the year-on-year, we're expecting plus 3.1%. So if you go back into the mandate of the Fed, is normally 2%, as we mentioned last weekend. So what does it tell you? It means that the 3% is the new 2%, and the Fed is okay to say, oh, we're going to be having, inflation for the next 6 to 12 months. As always, the risk is to be having higher inflation, but if you look at the Fed, what matters to them on their mandate is mostly the job market. So S&P 500 move on CPI, Dave. Most recently, except the one in April with tariffs, market has been doing okay. So this is inflation, CPI, bond supply. We do have tons of conferences. I only put the Goldman Sachs Tech conference that's going to be running at the start of the week, but you have tons of other conferences. You do have Oracle on Tuesday and Adobe on Thursday. To me, those are two interesting names for the AI space. We have more with the ECB rate decision on Thursday. And finally, there are tons of new paper coming into the market. So we do have Gemini, we do have Klarna, where the IPO is going to be on Wednesday. So as always, be looking at what is driving this market, where is the flow going. What I want to flag is this chart where you see on the left-hand side, stock versus the S&P versus the overall IPO index that has been built by JP Morgan. As you can see, most recently IPO indexes have been underperforming the overall market. So on the first few days, those IPOs will be doing pretty well, but after that, as we saw in August, all the names that were recently IPO'd on average have been underperforming the market. So be aware of this, that maybe you're gonna have a pop in the first few days, but most recently we saw underperformance of those new IPOs. What about the move for the week? Looking at the S&P weekly straddle, where the market is expecting plus minus 1.2% for the week. So this is more or less what happened for the week. What we think is going to happen in the next few weeks, with, as we said, keeping your eyes on the inflation and looking at bonds, because we saw big moves in the 10 years, in the 5 years, and same with the Fed funds rates, where market is expecting, has been seeing yields much lower. Are we going to have a confirmation this week with the CPI and the PPI? So that is the big question. We saw the gold is still the flight to safety that has been up 4% for the week. And as always, some big moves for stocks. So all that I mentioned today is more or less what we discuss on the trading community on Discord, that we try to build with the 4x4, which is a video series with where you're going to have 30 videos, 50 Excel spreadsheets to build this knowledge and to help you navigate those markets. Any questions, you can send me an email at greg@Dupont Trading. And this is it for me for this week. Have a good trading week. Bye-bye.